Hello everyone and welcome to this class where we would be discussing about cash flow statement in your AS3 in your CA intermediate. Now cash flow statement comes at two places, okay? One, it comes along with AS3 as an accounting standard, and then as the second part in your final volume it also comes as a part of the preparation of financial statements chapter. Now over here the questions can be of two types. First, you may be asked to identify whether a particular cash flow is in the nature of operating, investing, financing, or you might also be asked to prepare a full-fledged statement. So in today's session, we would first be discussing all the concepts and then doing all the questions pertaining to the cash flow statement section. So let us get started. So when we look at a cash flow statement, it is a part of the core financial statements. Like you have income statement and the balance sheet. Similar to that, there's also cash flow statement, and hence it is a part of the core financial statements. Now within these core financial statements, you need to prepare a cash flow statement not in the notes but as a part of the core financial statements, and the guidance for that is given under accounting standard 3 or AS3. Now what is a cash flow statement? Basically is nothing but a vertical presentation of, let us say for simplified terms, a cash bank account. So when you look at the income statement, everything is prepared as per accrual. However, we want to figure out how much is the cash paid, how much is the cash received, and hence you want to see the flow of cash. That can be done by preparing the cash flow statement. Now within cash flow statement, there are three main parts. First, there's a cash flow from operating activities where cash collection from sales, cash payment to suppliers, cash payment for your day-to-day operating expenses, even taxes in general will be taken over there. So every item from your day-to-day operations which are revenue in nature will go under cash flow from operating activities. Then you go to investing activities. Like for example, you might use the money that you have to buy fixed assets, to buy intangibles, to buy investments, or that is a cash outflow. Or you might generate cash from selling these investments, or selling these fixed assets, or selling these intangibles. These are all cash flow from investing activities. Further, investments in equity shares, bonds, etc. are purely in the nature of investments, and hence any income that you get from them in the form of dividend income or interest income will also go in the cash flow from investing activities. In fact, in case you have any taxes that is purely linked to investing activities, like for example, you might have capital gains tax on sale of a fixed asset or sale of an intangible. Now since this is a tax which is connected to an investing activity, the tax over here should also go along with investing activities. Okay, so this is purchase or sale of long-term assets like BP, intangibles or investments, and income thereon will also come over here. And finally there is financing activity. Now sometimes you might need funds from providers of capital, and your internal sources, that is your cash flow from operations, may not be sufficient. Like you might go to debenture holders, you might go to preference shareholders, you might go to equity shareholders, and you might raise funds, equity shares, debentures or preference shares. That will be a cash inflow from financing activity, or you have to pay them off, in which case you are repaying a loan or redeeming a debenture or a preference share, or buying back equity share, in which case this is also cash outflow but from financing activities. Now there are certain items that you have to pay to the providers of finance, like you might have to pay interest, you might have to pay dividend. These payments are also taken as payments from financing activities. Now what happens in a cash bank account is you just dump in all the items. However, in a cash flow statement, you properly organize them and then subdivide them between operating, investing and financing. Now during the year, your opening cash may be 100, your closing cash may be 150. So there's an increase of FD during the year. Why is the increase happening? It may be partly due to operating, partly due to investing and partly due to financing. So we are trying to educate the reader of the finance statements that this is your change and this is happening due to these three factors, and we'll try to study each of these factors in a lot of detail. Now as we said over here, interest paid or dividend paid, you guys tell me, where will this go? Well, they are paid to providers of capital, and hence they will be taken along with financing activities. On the other hand, interest income received or dividend income received should go along with what? Well, this is linked to your investments and hence will be taken in cash flow from investing. So this will be along with investing. Now over here there may be some TDS or some tax on this dividend income. The law says that usually tax should be recorded where the underlying item is going. Now, usually tax is on income, and income is your operating income arising out of sales, purchases, profit, etc., which is usually operating in nature. However, if your tax is specifically arising on an item which is linked to investing or which is linked to financing, then the tax will also be shown along with that. Again, over here, sometimes it might happen that there is some interest that you are charging from your customers because you have given them extended credit as a part of your sale, or interest that you have to pay to your suppliers. Now, these are interest incomes or expenses which are linked to payments or receipts from suppliers or customers, and hence they are linked to operations. In such case, this will also be linked to operating activities. Further, sometimes there might be some extraordinary items like you have a lottery winning. Now, this lottery winning is not linked to directly operations, investing, or financing. However, if nothing is available, you'll show it separately as an extraordinary item within operations. Having said that, if it is linked to investing, like there was a big fire, because of it you suffered a loss and you are receiving an insurance receipt on fixed assets being destroyed, in which case this will go in investing, or this was insurance proceed on stock being destroyed, then it will go in operating. Having said that, this will always be shown as a separate line item as an extraordinary item. Okay, then when you look at the reconciliation at the end, you will see that there is a net change in cash and cash equivalents. We'll do that in some time. But then what is meant by a cash equivalent? Cash, we know, cash is like legal tender, maybe even bank balances that can be taken as cash. But what is a cash equivalent? Well, the law says that cash equivalent will be short-term, highly liquid, marketable securities where they are not subjected to any change in value. Like for example, when you invest in equity shares, they may be liquid, that is you can sell them easily. They may be marketable because they are listed. However, their value fluctuates greatly and hence they cannot be a cash equivalent. However, when you invest in a debenture, a bond, a government security, then that is fairly a stable value and hence it can be a cash equivalent provided it is very short term. The very short term over here is defined as 3 months from the date of acquisition, not 3 months from the balance sheet date. It should be 3 months from the acquisition date whenever you acquire. Like for example, you acquire on 1st February and it is maturing by 15th of April. That is, it is maturing within 3 months, in which case it can be taken as cash equivalent, otherwise not. So cash equivalent can be local or foreign. This is cash. Equivalents, they are very short term, highly liquid instruments which are marketable, which are readily convertible into determinable amounts of cash, and there is any insignificant risk of changes in value. I think this is kind of a bit stuck up over here. If I can just bring it back, here you are. There's nothing else. I mean, most of the things we have discussed, there's nothing that was to be referred that was missed. Operating, investing, financing, and then interest paid, interest received, dividend paid, dividend received. Then you had cash equivalent on the next page, which is cash, local or foreign currency, and then demand deposits. And within cash equivalents, again, the important thing is it is subjected to a stable value, very short term in nature, and highly liquid. Very short term is generally interpreted to be less than or equal to 3 months from the date of acquisition. And in case they are in foreign currency, we need to convert them at the closing rate since they are monetary in nature as per AS 11. Now, cash flow statement is generally a set format. However, the cash flow from operations can be segregated into either a direct method or an indirect method. Investing and financing, remember, remains the same. But when you look at the direct method, it means that you will directly take whatever is the operating cash flows, you will directly take that. Like for example, cash collection from customers, that's a direct cash inflow from operations. Cash payment to suppliers, cash payment for expenses, all of these, cash payment for salaries and wages, all of these are direct expenses. And hence, one of the ways in which you can calculate the cash flow from operations is a direct method. We'll study that in detail on how to calculate that. Secondly is your cash flow from indirect method, where you say that, well, you know what, ideally, when you look at the income statement, within income statement, net profit is there. Now, net profit is usually linked to operations. And hence, when we look at net profit, we would say that, well, net profit is actually your operating cash flow. However, there are some impurities within net profit. Maybe it has some non-cash items like depreciation. It may have some non-operating items like interest or loss or gain on sale of fixed assets. or maybe certain other adjustments that you'll have to do. So under the indirect method, you don't directly take the cash flows. Instead, you indirectly find that what should ideally be your cash flow from operations. Now, how do you do that? Over here, the selection of the method, remember, depends on the data available in the question. If your data is given regarding only the bank account, then direct method is the only method possible. If your data is given regarding only 2 balance sheets, then indirect method is the only method which is possible, because you don't have the direct sales, purchase, etc. But if you are given data regarding 2 balance sheets and 1 income statement, then you can either follow the direct method or the indirect method, whichever is more comfortable for you. Now first what we'll do is we'll take the sample format under the direct method. Under the direct method first, remember cash flow statement is for the year. This cash flow from operating activities, you'll start with cash sales or cash collection from debtors. Now in this case, you can either prepare the debtor account from the balance sheets available, or you can say opening debtors plus credit sales minus closing debtors. Can I say if I were to visualize and prepare a debtor account, this will be your opening debtors, this will be your closing debtors, then there will be credit sales, and the balancing figure will be collections. So over here, rather than preparing a ledger for every item, you can visualize and do opening plus the P&L item minus closing. This is applicable everywhere. Like you might even have cash purchases or cash paid to creditors. If you visualize a creditors account, you'll have opening creditors plus credit purchases minus closing creditors, or you have wages, opening outstanding wages plus salaries and wages of the current year minus closing outstanding wages, and so on. This will give you your cash flow before tax is paid minus tax will give you cash flow from operations. Remember, in case there was some extraordinary item, that will be shown separately. Within cash flow from investing activities, this is the second thing. You will show interest income, dividend income, again sale of property, sale of intangibles, purchase of property, purchase of investments, and even capital gains tax or tax on interest or dividend income will come over here. Then you have cash flow from financing activities. Within this, you will have shares, equity preference or debentures issued, repayment of loans or debentures, buyback or redemption of equity shares, or dividend or interest paid, and tax if any. Now this will give you cash flow from financing. So A plus B plus C. Over here, if it is a cash inflow, you keep it as positive. If it is a cash outflow, you put it in brackets, and that will give you the net changes in cash and cash equivalents. To that, you will add the opening cash and cash equivalents, and that will give you the closing cash and cash equivalents. We'll do some practice and get better clarity. Now, what if there's an indirect method? Now, indirect method requires differences only in cash flow from operations. Investing and financing, remember, remains the same. Within cash flow from operations, you will start with net profit. If it is directly given, nothing like it, you take that. If not, then you take the P&L balances in the balance sheet. Like for example, you will have an opening P&L balance of 100, closing P&L balance of 180. We may say that 80 rupees is the profit or retention during the year, and hence unless given otherwise, that may be the profit. So over here, you will start with a net profit. Ultimately, you will add back tax expense. Whatever is the tax expense, you will add back, and then at the bottom you will subtract tax paid. So you will start with net profit after tax. In case that is not available, you take the differences in reserves. To this you will add back tax expense, that is the tax that has gone to the P&L, but that may be different from the tax paid. So right at the bottom you will subtract tax paid as well. So all the numbers you find profit before tax. So all numbers you do adjustment and then directly adjust tax separately. Now there are three main items. One is non-cash items like a depreciation, which would have been subtracted while calculating net profit, but that does not reduce your cash flow, and hence you will add back a non-cash item like depreciation or an amortization or an impairment, for example, or a write-off. These are all non-cash items. So over here, the first of these adjustments would be your non-cash adjustments, depreciation, amortization, etc., which has been reduced while calculating PAT, but should not be reduced while calculating cash flow from operations, and hence you add them. Second is the non-operating items. Like when you prepare profit and loss, there might be some non-operating items like interest expense or interest income. So these are financing or investing in nature, or gain or loss on sale of fixed assets. These are not linked to operations. They are linked to either investing or financing activities, but they have gone into your P&L, and hence you will reverse the effect. So if there is an interest expense, you will add back. If there's a loss on sale of fixed assets, you will add back. If there's a gain on sale of fixed assets, you will deduct. Interest income, you will deduct, so that you will get purely the amount linked to operations. Further, this interest income, whatever is received, will go in investing. Interest paid, whatever is paid, is go in financing. Now this is the second adjustment, non-operating adjustment, like interest paid, dividend income, loss on property, etc. Now ideally one can say that we have cleansed the P&L account for items which are either non-cash or non-operating. However, the items which are operating as well in your P&L, you have taken sales. However, in your cash flow, you need to take cash collection from sales. So over here, what will happen is, in your P&L while calculating profit, you have taken the sales. But in cash flow, what if your entire sales is not collected? And hence, you'll have to make an adjustment for debtors. Further, in your P&L, you have taken purchases or COGS. However, what if you have not paid for them? Like there is creditors, or maybe all the inventory is not sold, so there's closing stock, and hence there will be certain adjustments. Now, from an exam perspective, remember these are working capital adjustments for operating items. What are these working capital adjustments? On stock, on debtors, on creditors, on outstanding expenses, on prepaid expenses, etc. These are all linked to operations. And the general rule that you will remember over here to make those working capital adjustments is increase in current assets you will deduct, that is opposite relation. Increase in current liabilities you will add, that is a direct relation. Sir, what is the logic behind this? Well, if your debtors are increasing, that is opening debtors are 100, closing debtors are 150, that means whatever has been sold, उसमें से 50 has not yet been collected. 100 and 150 के बीच में का difference, debtors are increasing by 50, so 50 is the lower collection and hence you will deduct. On the other hand, if creditors are increasing, if your opening creditors were 100, closing creditors are 150, that means you have recorded all the expenses. However, 50 of those expenses have not been paid, and hence that will increase your cash. And hence increase in creditors you will add, increase in debtors you will deduct, and so on. General rule that you can remember over here is for your operating assets and liabilities. Remember, operating assets can be debtors, creditors, accrued expense, prepaid expense, etc. Rule is current assets have an opposite, that is inverse relationship. If there's an increase, you will deduct. There's a decrease, you will add. Whereas current liabilities will have a direct relationship, as you can see over here. And this will give you your three adjustments: non-cash, non-operating, and working capital adjustments. And then you have less tax paid to get cash flow from operating activities. Remember, the operating adjustments that you do are only for operating items over here, like dividend, interest. Even if they are dividend payable, dividend receivable, interest payable, interest receivable, provision for tax, you will not record that separately over here. That will go along with the corresponding dividend paid or interest income. Or like for example, if there was an opening interest receivable of 10, closing interest receivable of 15, and during the year you have recorded an interest income of, for example, 50. So you will say that during the year, if there was an interest receivable of 10, over and above that 50 has been the income accrued, closing is 15, so during the year 45 must have been received. So you will say opening plus, that is 10, plus interest income, that is 50, minus closing, that is 15, that is 45 must be the interest income received in your cash flow from investing activities. Now this is one chapter where if you just listen to the theory, it does not really make as much sense. So what we'll do is we'll do the problems. The problems over here are split over two volumes. In your volume number 1 or the volume of your institute where there is cash flow statement AS3, there are a few problems. And then in the preparation of financial statements, your final volume, there is another section of cash flow statement where you have detailed problems. We'll do both of them. So first we go to the accounting standards part. Here you have question number 1. You are required to classify the activities as operating, investing and financing or cash equivalent. So every item we will segregate. Purchase of machinery, investing. Sale proceeds from issuance of equity share capital. Financing, cash sales, operating. Proceeds from long-term borrowings, financing. Proceeds from trade receivables, operating. This is linked to operations. Cash receipts from trade receivables, again operating. Trading commission received, linked to trade, again operating. Purchase of investment, investing. Redemption of preference shares, redemption bhi hone to, this is financing. Cash purchases, operating. Proceeds from sale of investing. Purchase of goodwill is an intangible, again investing. Cash paid to suppliers, operating. Interim dividend paid on equity shares, dividend interim or final which is paid is financing. Wages and salaries paid, operating. Proceed from sale of patents are intangible asset, investing. Interest received on debentures held as investment, investing. Interest on long-term borrowings are financing in nature, so interest paid on them will also be financing in nature. Office and admin expenses, paid, operating. Manufacturing overheads, paid, operating. Dividend received on shares as investment. So income on that will also be investing. Rent on property held as investment. Even if property is held as investment and rent is received, that is investing. Selling and distribution expenses paid, operating. Income tax paid unless given otherwise, operating. And dividend on preference shares, financing. This is dividend paid. Underwriting commission. Usually underwriter's commission is paid when you are raising funds and there is an underwriting happening. So this is linked to financing. Rent paid, operating. Brokerage paid on purchase of investments. Investing, it is linked to investments, will be added to the cost of the investments. Bank overdraft. Financing, even if it is a short-term borrowing, it is a borrowing. Cash credit, also a borrowing. Financing. Short-term deposits, even if it is short-term, you are investing. Investments. Marketable securities, if they are highly liquid, subject to insignificant change in value, and for a very short term, this can also be cash equivalent. Otherwise, they will be investing. And refund of income tax received. Well, usually when you pay income tax, this goes in operating unless given otherwise. So if you receive the refund, that will also go in operating. Okay, question number 2. X purchase debentures of rupees 10 lakhs of Y, which are redeemable within 3 months. Now these are debentures. They don't have a significant change in value. So they have insignificant change in value and they're redeemable within 3 months from the date of acquisition. How will you show this item as per AS3 while preparing cash flow statement for 31st March 17? Well, this can be a cash equivalent because it meets the criteria for cash equivalents. Question 3. Classify the following activities as per AS3. Interest paid by financial enterprise. Interest paid by a financial enterprise. So I may be a bank or an NBFC, in which case my interest paid is operating in nature. In all other cases, it is financing in nature. So over here, by financial enterprises, like a bank, for that interest is linked to their operations. Tax deducted at source on interest received from subsidiary company. Well, interest from subsidiary will go in your investing activities. Tax on that will also go in investing activities. Deposit with a bank for a term of 2 years. This is also investing. It is more than 3 months, cannot be cash equivalent. Insurance claim received towards loss of machinery by fire. It is investing but an extraordinary item. And bad debts written off. Basically, it is non-cash. However, when you follow the indirect method, it might have some adjustment as a non-cash item, but under the direct method, if you have a bad debt, there is no cash movement. So over here, bad debt, non-cash item. Insurance claim, extraordinary item. Deposit, investing. TDS, also investing. Then you go to question number 4. Following is a cash flow abstract of Alpha Limited for the year 31st March 17. You have been given a cash bank extract. Prepare the cash flow statement for the year ended 31st March 17 in accordance with accounting standard 3. If you have a cash bank extract, the only way you can solve is by using a direct method. Opening balance, this will go in opening cash and cash equivalents. Bank, also opening cash and cash equivalents. Share capital, this is on the debit side, so you are receiving. So this will be financing cash inflow. Collection on account of trade receivables, operating cash inflow. Sale of fixed assets, investing cash inflow. Payment for account payable, this is operating. Salaries and wages, operating. Payment overheads, operating. Fixed assets acquired, investing. Debentures redeemed, financing. Bank loan repaid, financing. Taxation if nothing is given, operating. And dividends including DDT. Dividends paid will go in financing. And then you have closing. Cash and cash equivalent, like you see, opening is around 80. Closing is around 15. So there's a 65,000 reduction. So there's opening of 80, closing at 15. So there's an 65,000 net change in cash and cash equivalent. Okay, how will you do all of this? Well, all of this, जो भी आपको operating है, 1 inflow, so positive, outflow, negative, all of that you take and you get cash flow from operations. Next, you have investing. Fixed assets. I think there are just 2 things. 1 and 2. And lastly, financing. 1, 2, 3, 4. These are the 4 items. 1, 2, 3, 4. And you get cash flow from financing and net changes in cash and cash equivalent. Okay, so that is about it. We will do how to prepare the format and everything, but in terms of the adjustments, this should take care in case data is given regarding a bank account. Then we have question 5. Prepare cash flow from investing activities as per AS3 of Subham Creative for the year ended 31st March 19. So this is only cash flow from investing. Machinery acquired by issuance of shares at face value. This is non-cash. Your entry will be machinery account debit to equity share capital. There is no movement of cash, and hence even if it is machinery acquired, you are not paying cash, and hence this is non-cash in nature. Claim receipt for loss of machinery by earthquake. This is investing, but an extraordinary item. Unsecured loans given to associate, no matter to whom it is given, it is a loan given. Investing, cash inflow. Interest on loan receipt from associate company, again investing, cash inflow. This 5 lakhs will be cash outflow. 70,000 will be cash inflow, non-cash in nature. Okay, pre-acquisition dividend received on investment date, whether it is pre-acquisition or post-acquisition, dividend received is received from investment and hence is investing in nature. Debenture interest paid, financing in nature. Term loan repaid, financing in nature. Interest received on investment, TDS of 8,200 was deducted on the above interest. So whatever was the interest plus 8,200, maybe 78,200 would be your total interest, and out of that you will have maybe some other interest received. TDS was deducted on the above interest, so this is 73,800 something else. So 73,800 plus 8,200 and hence you will have 82,000. But TDS is also tax. We will have to show it separately. So कोई बोलेगा क्या मतलब है ये दोनों अलग करने का, because you are doing presentation, and hence you will have to show this separately within investing only. Purchase debentures on 1st December which are redeemable within 3 months. तो ये तो cash equivalent हो जाएगा. Book value of plant and machinery sold was 90,000, but this is sold at a loss of 9,600 and hence the sale proceeds must be 90,000 minus 9,600. This is 80,400. So when I go to see, my cash inflow will be from investing activities. First, unsecured loan to associates minus 5 lakhs. Then, this machinery extraordinary item 55 shown separately. Then interest on loan from associate. This is income 70. Then interest income separately 82,000. Pre-acquisition dividend 52,600 less TDS receipt or TDS deducted, and then 80,400. Now other than that you are purchasing debentures, but we are treating this to be cash equivalents because they are within 3 months, and hence this will be your cash from investing before extraordinary items. You adjust extraordinary items and this will be your final item. Okay, next you go to question number 6. Money Limited is a non-financial company, so it's not a bank or an NBFC, and has the following entries in its bank account. It has sought your advice. क्या बात है? For treatment of the same for the purpose of cash flow preparation. Loans and advances given and the interest earned on them to suppliers operating, to employees linked to your operations operating, to subsidiary companies investing, investment made in subsidiary Smart and dividend receipt, investing, dividend paid for the year paid, financing, TDS on interest income. Interest income is investing, TDS on same will also go in investing, TDS on interest earned on advance given to suppliers. Advance given to suppliers is operating, so TDS on that will also go against operating, and that is it. So over here this was operating, investing, financing, investing, suppliers operating, employees operating, even if it was customers operating, subsidiaries are investing. Then you go to question number 7. Now the following information of XY Calculate cash and cash equivalent for 31st March 12 as per AS3. Balance as per bank statement. This is clearly a part of your cash equivalent. However, there are certain checks which have been issued but not presented in the bank. Now, my cash balance is a cash balance as per my books of accounts and not as per my passbook. Ideally, the balance in my passbook will match with the balance in my books of accounts. However, in my books of accounts, what must be appearing? Well, 25 minus 15. That must be 10,000 must be appearing as my balance in my books. 25 is there in the passbook, but I've already cut out certain checks, but they have not been presented. But in my cash book, I must have passed the entry supplier's account debit to bank, and hence my cash bank balance is 10,000. Short-term investment in liquid equity shares. This cannot be a cash equivalent because it is equity shares. Will have a significant change in value. Fixed deposit created on 1st January 11, maturing on 15th April 12. Again, this cannot be cash equivalent because it is more than 3 months from acquisition date. If you take the balance sheet date on 31st March 12, उससे सिर्फ 15 दिन बाकी है. However, you don't take that. You take 3 months from the acquisition date. This is not 3 months from the acquisition date, and hence it is not a cash equivalent. Short-term investment in highly liquid sovereign. Sovereign means government debt mutual fund on 1st March 12, having maturity period of less than 3 months. Yes, this is a cash equivalent. So this is another 1 lakh. And bank balance in a foreign currency account in India. Conversion rate on date of deposit is 69 and on 31st March is 70. Remember, you will convert it at the exchange rate first, at the rate on the date of transaction, and then being a monetary item as per AS11 that you will study, you will take it at the closing rate, and hence this is 70,000. So if I were to total all of this, this must be 1,80,000 in total. A very unique adjustment pertaining to cash and cash equivalents primarily. And then you have the last question, number 8. So it was one question unique to cash equivalent, one small question which is unique to, let us say, investing over here. Following are the extracts from the balance sheet of ABC. Equity capital. You can see equity capital is increasing. By how much is it increasing? Maybe 10 lakh 60. Why is it increasing? We'll see. 10% preference share capital. You can see it is reducing by 1 lakh. Securities premium. 5 से 5 lakh 50. Maybe. This is maybe new securities issued at a premium. 50,000 का premium लग रहा. And profit and loss. 20 से 28. Can I say this is a gap of 8 lakhs? Must be profit. Now equity share capital for 31st March 21 includes 60,000 equity shares issued to Grey at par for supply of machinery of 60,000. Which means now the share capital is going up by 10 lakh 60, but is that 10 lakh 60 backed by cash? No, 60,000 out of this is actually against machinery, and hence the remaining 10 lakhs will be towards cash. So this is 10 lakhs cash flow from financing. Positive. Profit and loss for 31st March 21 includes 50,000 of dividend received on equity investments in X. So when I look at this 8 lakhs, this must be the profit during the year, but this profit is calculated after including dividend income. But that dividend income is linked to investing. Show the related items that will appear in the cash flow statement as per AS3. Now if I look at the cash flow from operations, I will say 8 lakhs here, but out of this 8 lakhs, I'll subtract 50,000. I don't have anything else, and then 7 lakh 50 maybe my cash flow from operations. Within investing, the same 50,000 will appear as dividend income, cash flow from investing. Okay, next, when I look at financing, there will be equity shares worth 10 lakhs, which is positive. There's a redemption worth 1 lakh, which is negative. And as this sum streams to be 9 lakh, so 7 lakh 50, 50,000, and sorry, my bad. I just looked at this. I ignored the fact that 50,000 is also increase in securities premium. So this 10 lakh of securities must be issued at a premium for around 10 lakh 50. There's a possible mistake. ये अपने को पहले याद रहेगा. Sir ने mistake किया. So we will remember this. We are auditors. So this is 9 lakh 50,000. Are we clear with this? Okay. Now we don't have opening and closing cash balance data, but this will give you your extract of the cash flow statement. Now this kind of takes care of basic accounting standard related questions, which may come for anywhere between 4 to around 8 marks. Now what you will do is you will go to your volume 2, where there are slightly more detailed problems. Even over there, we mark the LDR questions. Even over here, as you see at the top, you have the LDR questions. Some of these questions are similar to what is there in your cash flow statement. So there we have written similar. But other than that, what is different? We'll quickly discuss this. Okay, so the question over here is exactly same as question number 6 that we did for cash flow statement. So we're not discussing that again. Next, we go to question number 2. Following are the extracts of the balance sheet of Agile Limited. So you have the balance sheet and notes. You are required to show the related items in the cash flow statement. So usually what we do is, in case you have to prepare the entire detailed cash flow statement, is a very small question. If it is indirect method, we leave one full page for the cash flow from operations, then half page for investing, half page for half page for financing, and the last 3 lines: net changes in cash and cash equivalents, opening cash and cash equivalents, and then closing. So the next thing is we will write down data regarding opening, data regarding closing. Then we go to the net profit, add back tax expenses, less tax payment, and then we go to the entire question adjustment by adjustment. Like for example, over here you have shareholders funds. Over here this is 5 lakhs and 5 lakhs, so no change. Reserves and surplus, so there is 50 and 90, which means there seems to be a 40,000 increase. So can I say this 40,000 may be, let us say, due to net profit? Okay, so there may be in your cash flow from operations 40,000 increase due to net profit. Long term borrowings over here seems to be, so this is in your cash flow from operations, 10% debentures increased by 2,50,000. This is cash flow from financing. Now you have other current liabilities has 5,000 of unpaid interest. Now what is your total interest? 10%. Now we don't know when the 2,50,000 of debentures were issued. They may be issued at the beginning, they may be issued at the end. So if you assume that they were issued, for example, I don't know, at the beginning, in which case 7,50,000 into 10% aayega, that is 75,000, minus 5,000 is still unpaid, so 70,000 will be interest paid within financing. Or if you assume they were issued at the end, then 50,000 into 10%, that is 5 lakhs into 10%, that is 50,000, out of which 5,000 is unpaid, so 45,000 must be paid. Okay, next you will have, so you don't have the complete data over here, we'll just review that quickly. And you have intangible assets going from 2,05,000 to 1,80,000. Well, we believe that may be due to amortization. So if I look at cash flow from operations, I will start with net profit, which seems to be 40,000. On this 40,000, you will add back non-cash items like amortization, 25,000. You also add back, let us say, interest expense, maybe 75,000 if you assume that this was issued at the start, and hence this will be 40 plus 25 plus 75 comes to 1,40,000. When you look at cash flow from investing, well, there does not seem to be anything in investing. But when you look at cash flow from financing, there will be, let us say, debentures issued, maybe 2,50,000 positive, and interest paid, maybe 70,000 negative. 75 minus 5, which is unpaid, and that is about it. Are we clear with this? यहाँ पे ना आपको ओपनिंग क्लोजिंग और कुछ दिया नहीं है, so we don't have to do anything. Now we look at question number 3. Again, this is similar to question number 4. That question where you were given a bank account, and from the bank account you had to give the cash flow from cash flow for the period. Like this is your opening balance, this is your closing balance. Then cash sales is operating in nature, trade receivables operating, trade commission operating, sale of investments investing, loan from bank, financing, interest and dividend. This is received. So this must be investing. Cash purchases operating, trade payables operating, office and selling expense operating, income tax operating, investment investing, repayment of loan financing, interest on loan financing, and you can just draw up the cash flow statement. Quite basic. Next you have question number 4. Now prepare the cash flow statement for M&T for the year ended 31st March 11 with the help of the following. So you have all of this data. Last May you have cash and cash equivalents at 31st March 10 and 31st March 11. So this is opening, this is closing. Now company sold goods for cash only. Gross profit ratio was 30%. For the year, gross profit amounted to 380 to 500. So maybe if you want to find sales, 380 to 500 divided by 0.3. Can I say 12,75,000 will be your sales? Opening inventory was less than closing inventory by 35,000. So this is the difference between opening and closing. This may be there in COGS, purchases, etc. We'll see that wages paid during the year is 490 to 500. So this is 490 to 500 wages paid. Office and selling expenses paid 75. This is 75. Dividend paid during the year is 30,000 including DDT. This is in financing 30,000. Bank loan repaid during the year is 2,15,000 including interest. So over here 2,15,000 financing. Maybe you can show 2 lakh, you can show 15 separately. Trade payables on 31st March 2010 exceeded the balance on 31st March 11 by 25,000. So your closing trade payables on 31st March 10 exceeded the balance on 31st March 11 by 25,000. So your opening was greater than closing. देखिए क्या करना है. Amount paid to trade receivables was 4,60,000. This is operating less 4,60,000. Tax paid during the year amounted to 65,000 and provision for tax was 45. Basically, ultimately tax paid is 65,000. Investment of 7 lakh were sold during the year at a profit of 7 lakh 20. So investing will be 7 lakh 20. Depreciation on fixed assets is 85,000. So if you are doing the direct method, you don't have all the data for indirect. So if you are doing direct method, depreciation is non-cash, should be ignored. And plant and machinery purchased was 2 lakh 50. So this is investing 2 lakh 50. Now if I go to see what is there in operating, maybe 1275 minus 490 to 500 minus 75,000. Financing minus 4,60,000 and tax paid within operations 65,000. 180 to 500. So your CFO would be 180 to 500. Within CFI, cash flow from investing, you have these two items, 720, 250. That's about it. 720 and 250. 4,70,000. Net spend, net again cash inflow. And within CFF, let me take a red color, 2,45,000, maybe 245. So if I take 180 to 500 plus 470 minus 245, this is what, 4,07,500. Your opening is 2 lakhs plus 4,07,500 and you get 6,07,500 closing. So it's fairly basic, I would say. Question number 4. The important questions are somewhere in the middle of this chapter. Ryan provides you the following information at 31st March 11. So you have this entire balance sheet and you've been told analysis of selected accounts during 10-11. अच्छा last में क्या बोला है? Prepare cash flow using indirect method. Now if I had to follow indirect method over here, what will I do? I'll prepare the format. In the format, the entire cash flow from operations on the first half, investing and financing on the other halves. So over here, when you look at cash flow from operating activities, you have purchase investments of 78,000. Okay, this will affect investments. Plus 78,000. Next, you have sold investments of 1 lakh 2. Okay, so this is 0.1 and 2, both are affecting investments. Purchase plant assets for 1 lakh 20. 0.3. Sold plant assets of 10,000 will accumulate depreciation for 5,000, again 0.4. So we'll mark these points. Issued 1 lakh of bonds at face value in exchange of plant assets on 31st March 11. So here there is 0.5 for plant as well as there is bonds. Point number 5. Repaid 50,000 of bonds at face value. 0.6. Issued 50,000 shares of rupees 10 each. 0.7. Paid cash dividends of 8,000. Maybe this will affect reserves and surplus. What do you have to do? Sir, we need to prepare the cash flow statement. So how will we prepare the cash flow statement over here? We will say that, okay, we will prepare the entire format. I'm not sure if I can just bring that up. If I have this handy, just a second. Yes. So we have question number 3 over here. So what is happening? 3 तो हमने कर दिया. Which question are we? चलो एक बार एक काम करते हैं. It will be there in your notes. I'll share these notes separately. We'll just discuss. I think 5 है यहाँ पे. चलो whatever it is, we'll just quickly review this. So we will look at the net profit. Net profit is how much? 16,000 plus income tax, and hence profit before tax comes to 23,000. So this is your cash flow from operation. You start with the profit before tax of 23,000. Last में tax paid आना चाहिए. You have any other provision for tax? Yes, there is income tax payable of 3 and 5. So when you look at tax paid, you will say your opening tax payable is maybe 5, closing is 3. So 5 plus during the year 7 minus 3. So 5 plus 7 minus 3. Can I say this comes to 9,000? 5 plus 7. Sir, 7 kahan se hai? This one. And hence I can say 9,000 is the tax paid. Aja iske baad one by one, if you are looking at an indirect method, you will have all of these items over here. Upon one by one karenge plant. Now when I look at plant, there are two accounts. One is an account for plant, one is an account for accumulated depreciation. I think इसको question के साथ ही करते हैं, solution के साथ. So I've tried to trace back the solution over here. This is question number 5 solution. So over here, as you can see, profit is around 23,000. Now, when you look at the plant account, there are 3 adjustments on the plant. So we'll have to prepare a working note for this. So in my plant account, I'm putting my opening balance. My opening balance is 5 lakh 5, closing is 7 lakh 15. Provision 68, 1 lakh 3. So you'll post up these numbers and then you will take everything. 0.3, 4 and 5. So when I look at my plant account, the first adjustment 5 lakh 5, 7 lakh 15, I'm purchasing plant 1 lakh 20,000, that will go in cash flow from investing. 1 lakh 20,000 purchased. Next, I'm selling plant. Here I've been told that plant with the original cost of around 10,000, accumulated depreciation of around 2,000 is actually sold for 5,000, and hence your entry will result in a loss of around 3,000. So if I put this over here, I will say okay, this is going out by 532, that is around 10,000. सामने हर एक का अलग अलग इफेक्ट. Bank will go in cash flow from investing and receiving money. 2,000 will go in accumulated depreciation, that is for assets sold, and another 3,000 will go under the indirect method as a non-operating item. And then there is plant purchase against bonds. So that is plant account debit to bonds, and that's about it. अच्छा अभी यहाँ पे there is also depreciation for the current year. If you see the question, वो आपको बोल रहा है depreciation for the current year is 37,000, and thereby if you now see the account balances, my point is, even if you were not given the depreciation, you could still find this as a balancing figure. Even if you were not given something else, like this asset purchase adjustment 3 was not given, you could have found this as a balancing figure. So this would take care of the adjustments regarding to plant. Okay. Next, you look at investments. Now, investments also has 2 adjustments. You prepare the investment account. So, within the investment account, you will put the opening balance 127, closing balance 1 lakh 15. Again, in adjustment 1 and 2, there is a purchase. So, whatever is the investment purchase, investment account debit to bank 78,000 as it is given. This will go as cash flow from investing. And then there is a sale. The question tells you that sold investments of 1 lakh 2 costing 90. So there is a gain on sale of investment of 12,000. That gain can also be seen over here. Similarly, the loss on plant of 3,000 can also be seen over here. So what will I do? Well, I will take 1 lakh 2,000 as cash flow from investing, 78,000 as cash flow from investing, and then I will adjust the gain separately. So over here, I will have 1 lakh 2,000 cash inflow. 78,000 cash outflow and 12,000 I will subtract over here. So ये अपने top 5 points हो चुके. After that you have what? So this is done. This is reconciled. No balancing here. Now all of these are working capital adjustments. So what is happening is inventory is going up by how much? 34,000. You will deduct working capital adjustment. Trade receivables going down, I think by 8,000. You will add opposite cash. ये तो आपने opening में ले लिया होगा. Prepaid expenses. I think this is 2011 and this is 10. So this is going down. So you will add 4,000. Share capital. Well, this is now first we will take the working capital adjustments. Okay, these 3 adjustments. If you go to see, they will go in cash flow from operations. Inventory 34 minus, trade receivables 8,000 plus, prepaid expenses 4,000 plus. Then when you get share capital, well, there is no other adjustment I believe for share capital, which means this is increase by what? 1,50,000. This will be financing in nature. So when I look at cash flow from financing, 1,50,000. If the question specifically tells you 15,000 shares are issued at rupees 10, that is done. Otherwise, you could have found this as balancing figure as well. Now, reserves and surplus. Ideally, if I go to see my opening reserves are how much? 132, closing is 1,40,000, which means there's an increase of 8. But profit up 16 hai. That means there is a remaining 8,000, maybe dividend. Again, I believe that is given to us. So over here, जैसे आपको देख के रखा है, paid cash dividend. Issued shares. My point is ये आपको spoon feed हो रहा है. Even if it was not given, you could have said that okay, my opening was 132, closing is 140. Ideally, 16,000 का profit add होना चाहिए. And hence, maybe there's an 8,000 dividend. This is financing in nature. So over here, there will be a financing dividend of around 8,000. Apart from that, when we look at the other items which are there, there is a bond which is 245, increasing by 1 lakh due to the plant, so becomes 345 minus 50,000 because of repayment. Now against the plant there's no cash flow, so 1 lakh will not go in the cash flow statement, but 50,000 repayment will go in the cash flow statement. Cash flow from financing, this will be minus 50,000 bonds repaid. Okay, sir. Then you have trade payable outstanding liabilities. Again, trade payables are going up, so you will add 7,000. Outstanding liabilities going up, you will add 3,000. Now other than that, you will see the income statement. If you see any other non-cash or non-operating items, ये 12 or 3 ले लिया, but this interest expense paid will go in financing and you will add it back while calculating operating. Interest income received goes in investing and you will deduct while calculating operating. So over here, when you go to see in CFO, add back 23, subtract 6. This 23 is paid over here. This 6 is added over here. Other than that, obviously depreciation of a non-cash tha, you would take that. And with that, ये 7 and 3 trade payables and with that all adjustments are taken care of. अभी भगवान का नाम लिया जाए, you will total up, get 47,000 from operations, 85,000 from investing, 69,000 from financing, and that will give you the net changes of 31,000, which you add to 15,000 to come to around 46,000. Now this is a very basic question. I would say you would need to practice cash flow statements. I can give you adjustments over here, but nothing can replace good old solving these questions to get a better grip. The adjustments you can understand probably by listening, but you will have to solve. Pause if possible and try to solve one of the questions. Like 6 over here, I'm not sure. आप solve कर सकते हैं वैसे? Yes, you can. I think. So you can pause and try question 6. I think this 1500 over here is 0. Keeping that into consideration, you can pause and try. Question 6, there's nothing new over here. In any case, Sun on 31st March 11 and 10 has the following details. You have this entire balance sheet, again the notes, and the profit and loss statement is given. Here you have profit before tax given as 4,500. You will take that. Tax expense for the current year, declared profit, written profit, everything. And then further information. Depreciation on fixtures, on vehicles. Proceeds on disposal of vehicles. Written down value. Profit on disposal. And then you have to prepare the cash flow statement. So you make the format, and then when you prepare, for example, a CFO, let's say CFI, let's say CFF. And then your opening and closing, 4,000, 8,500. So your opening is 8,500, closing is 4,000. So ये आपने already ले लिया. अच्छा, next you go one by one. We'll put the net profit. We will usually take the net profit before tax. अच्छा, if it is after tax, उस पर add back करेंगे, but then you'll take the net profit before tax and then see if there is any tax paid. यहाँ पे there's a provision for tax 1,500 and 1,000. So over here, in my less tax paid, I will say मेरा opening कितना था 1,000. To that during the year 1,500. Closing कितना है 1,500. So tax paid must be what? 1,000. During the year, if you are not very clear, prepare a provision for tax account and you should be getting this answer. अच्छा, other than that, अभी आप क्या करोगे? One by one, you look at every other balance sheet item. So you look at share capital goes from 50 to 60. कुछ reason दिख रहा है? Note 1. Equity shares 50 से 60. This must be financing. Equity shares 10,000 positive. Then you go to reserves and surplus. 4 से 5 is an increase of 1,000. कहाँ से increase हुआ? Well, this is the 1,000 retained profit, but इसके अंदर अपने tax का जो effect था we have taken 4,500 we have taken, but dividend we have not taken. Declared dividend. Over here, assuming that declared dividend over here is paid. Sir, how do you know it is paid? Well, it is not appearing as a payable, so it must have been paid. ठीक है, तो declared dividend ये भी निकल गया, तो reserves are done. Then you have trade payables. Over here there is an increase in trade payables, so you will add 1,500 plus trade payables increase, you will add 1,500. Then you have other current liabilities. 1,000 से 0 हो रहा है शायद से, एक सेकंड, 1,000 and 0. Opening was 1,000, closing becomes 0, but this was dividend payable. Will dividend payable come in working capital adjustments? No, this is dividend paid. At the end of the year, nothing is payable, and hence can I say further dividend paid, opening dividend which was still unpaid, 1,000 must be paid. अच्छा, next you will have tax हमने ले लिया, then you have PP 29,500 and 39,500. अच्छा, यहाँ पे अगर अपन देखें PP में you have a breakup given. You have building remains the same, no change. Fixtures 17 से 11. Well, depreciation during the year was only 1,000. So when I look at fixtures, you have 11 to start with, 17 at the end. Depreciation is 1, so you will add back depreciation of 1,000. But at the same time, there is a balancing figure. Maybe this is what? 7,000, I think. This is cash flow from investing, must be furniture purchased. Then you have vehicles 8 से 12,500. So when I look at vehicles, your opening is 8, closing is 12,500. During the year कुछ depreciation हुआ है, कितना है? 2,500. You will add that back. अच्छा, but during the year there is also a sale. Proceeds on disposal are 1,700. So in investing plus 1,700, and then there is WDV of 1,000. ये आप reduce कर दोगे. WDV of 1,000 and 700 is gain on sale. Okay, this gain on sale must have gone in the P&L, so you'll have to subtract it. Less 700. Okay, so this is done. So the balancing figure, if any, will be 2.5 plus 1 plus 12.5 minus 8. I think 8,000, if I'm not wrong, will be my furnitures purchased. So ये आपका हो चुका PP. Everything done. Current investment 1 से 2 हो गया. Maybe another investing activity. 1,000 of new investments purchased. This is not a cash equivalent unless given otherwise. Inventories 14 से 17. That is an increase of 3,000. ये अपन क्या करेंगे? Less. Trade receivables increase of 2,000. क्या करेंगे? Less. And that is about it. So if I go to see the working capital adjustments and everything, all said and done, आपका CFO कितना हो जाएगा? 4,500 plus 1,000 plus 2,500 minus 700 plus 1,500 minus 5,000 minus 1,000. एक बार verify किया जाए. 2,800. Next over here you will have 7 and 8 15 and 16. Can I say 14,300 negative? And over here, maybe 7,000 positive. 1, 2, 3, 2,800 minus 14,300 plus 7,000 comes to I think 4,500. Does it tally? Yes. इसका भी आपका board note होगा. You can refer that. 4,500 and opening 8,500 comes to 4,000. So this is how you will address these cash flow problems. Achha, question number 7 is a slightly different question. Over here, prepare the cash flow statement for the year 2011 in accordance with AS3. Make the necessary assumptions where required. Let me see if I can find this. Star Oils वाला question, ये question 6 था, ये जो हमने किया. Then you have question 7 है शायद से ये. Star Oils question. Ms. Jyoti of Star Oils collected the following information for preparation of cash flow statement for the year ended 31st March 11. Net profit. This will go in cash flow from operations. Starting में. Dividend including DT paid. This will go in financing. Less. Provision for income tax. Now this is net profit unless given otherwise. It must be after tax, which means if I do 25 and 5, this must be coming to 30,000 profit before tax, and then income tax paid 4248, ये less होगा. So if I go to see over here, for example, as you can see, 25 plus 5 will come to 30, and last में 4248 income tax paid. Okay, loss on sale of fixed assets. You will add this back while doing operating activities because this is non-cash in nature and book value of assets sold is 185. इसके ऊपर loss था. So sale proceed कितना होगा? Maybe 185 minus 40 comes to maybe 145. This must go in investing. So 145 investing में गया होगा. 145 goes in investing and 40 of loss will be added back. Okay sir. आगे depreciation charge to P&L 20,000. You will add back depreciation. Profit on sale of investments. You will deduct 100 from operating. Carrying amount of investment sold 27,785. 27,785 sold at a profit of 100. So this must be 27,885 sale proceeds. So sale proceeds अगर अपन ले 27,8 whatever 65 and 100 यहाँ पे अपन remove कर देंगे. Okay. Then you have interest income on investments. This is your income. You will deduct this from operations. And if it is received, you will add it in investing. Interest expenses of the year, 10,000. You will add back in operations. And interest paid during the year. You will take this in financing. So 10,520 जो आपने actually pay किया will go in financing. 10,520 will go in financing. And 10,000 of expense that is added back. Interest expense. Interest income of 2506 removed and interest income of 2506 which is received must be added. Depreciation of 20,000 तो हमने discuss कर लिया. अच्छा, next you will have what? Increase in working capital, that is net current assets excluding cash in bank. This is net increase. Increase in working capital is increase in net current assets. So you will deduct. In operating, ये आप deduct करोगे 56,081 right at the bottom. Purchase of fixed assets. Investing. Investment in joint venture. Investing. Expenditure on construction work in progress. Still investing. ये तीनों investing में ही जाएगा. Proceeds from call in arrears. You are receiving this from providers of capital. This is financing. Receipt of grant for capital projects. This is receipt for capital projects. So in line with institute solution, this is also investing. Proceeds from long term or short term borrowing. Both of these are financing. And opening cash and closing cash 5,003 6,998. So if you go to see over here 5,003 6,998. अच्छा इसके अलावा all of these investments, joint venture, construction work in progress, grant for capital project, all of them will come over here. Calls in arrears, long-term borrowing, short-term borrowing, all of them will come over here, and then you will total and pray to the God that your cash flow statement in a way reconciles. Are we clear with this? Okay, so this takes care, let us say, of an important adjustment. I would say new items over here would be calls in arrears, work in progress, joint venture, grant, short-term borrowings. These may be relatively new items. Question 8 is very similar to question number 4 in your volume 1. वो बैंक अकाउंट के बेसिस पे कैश फ्लो स्टेटमेंट बनने वाला हिसाब है. Nothing much over here. Then we have question number 9. Now within question number 9 also you have to take cash flow from operating activities using both direct and indirect method. Okay sir. So you have only cash flow from operating, you have P&L and the relevant balance sheet information. So if you look at direct method, within direct method you have revenue from operations, but इसके साथ इसके debtor का balance देखना पड़ेगा. 250, 400. So cash collection will be what? Well, this will be opening. Formula क्या होता है? Opening plus sales, that is 4150, minus closing, which is 400. So this is what? 250 plus 4150 minus 400. Can I say cash collection? होगा 4000. Other income. What is other income? Where is the note? Note 4. Other income है क्या? Interest and dividend. This will directly go in cash flow from investing. CFI, cash flow from investing. Then you have expenses, purchase of stock in trade, and then changes of inventory. Okay, purchase of stock in trade वापस opening creditors 230 plus purchases 2400 minus closing 250. तो ये शायद से आपको 2380 आ जाएगा. This is minus 2380. Then changes in inventory, you don't have to separately take that. Employee benefit expense, is there anything which is still payable? Outstanding wages 40 and 50. Formula same here. Opening plus during the current year minus closing. So ये शायद से आपको 790 आ जाएगा. ओके, नेक्स्ट डेप्रिसिएशन. ये तो नॉन कैश है तो डायरेक्ट मेथड में आएगा नहीं. फाइनेंस कॉस्ट, दिस विल गो इन कैश फ्लो फ्रॉम फाइनेंसिंग. इफ यू सी पॉइंट नंबर 5, दिस इज इंटरेस्ट, दिस विल गो इन कैश फ्लो फ्रॉम फाइनेंसिंग. बट ये हमें फाइंड नहीं करना. वी जस्ट हैव टू फाइंड कैश फ्लो फ्रॉम ऑपरेशंस. And then you have other expense. Is anything given regarding outstanding other expense? Yes, again 10 and 20. So this is 10 plus 200 minus 20. Opening plus current year minus closing. So this is 190. Tax expense is this 200. Within 200 हम ढूंढेंगे 180 plus opening plus current year 200 minus closing. So ये आपको 180 ला के रुकेगा. And this is profit from continuing operations. Balance of profit and loss transferred to general reserve. Dividend paid. Dividend paid is financing in nature. We'll not touch that. And that is about it. So if you go to see using the direct method, you will have 4000 plus minus 2380 minus 790 minus 190 minus 180. शायद से 460 आ रहा. Now if I look at the indirect method, I will start at 510, add back 200, come to 710. Now within 710 यहाँ पे आप उल्टा करोगे. So within 710 you will remove less tax paid, तो यहाँ पे भी 180 आएगा. But to remove non-cash, non-operating items, which is 100, which is 60. 100 for depreciation, 60 for finance cost, and also income of 100. So ये अपन remove कर देंगे non-cash, non-operating. Then you look at working capital items. Within working capital items, you will have increase in debtors 150. आप deduct करोगे. Increase in inventories maybe 20. You will deduct. Other current assets, what is that? यार अदर करंट एसेट्स में तो मन फंस गए. यू हैव बीन गिवन एडवांस टैक्स. ओपनिंग में 180 था. ड्यूरिंग द ईयर आई थिंक 195 was the advance tax, so that is what must have been paid. So यहाँ पे 180 and 180 पे हो गया. मैंने यहाँ पे जो प्रोविजन का बनाया था दैट विल नॉट वर्क बिकॉज 195 इज पेड, इट इज क्लियरली गिवन टू अस, एडवांस टैक्स इज व्हाट इज पेड, तो यहाँ पे योर पेमेंट विल बी 195 that is advance tax paid, that is your actual payment. If that was not available, we would have said that 180 opening का pay हुआ रहेगा, 200 is still payable. However, if it is given that 195 is advance tax, that is the tax paid, well that must be the tax paid, and hence ये थोड़ा different आ जाएगा. This was what, 4000 minus 2380 minus 4000 minus 2380 minus 790 minus 190 minus 195 445. चलो तो when I look at working capital adjustments, increase in inventory deduct, increase in trade receivables also deduct, advance tax taken separately. Acha, then you look at trade payables 230 and 250. ये क्या हो रहा है? 230 and 250, there is increase, तो अपन ऐड करेगा. Short term provisions already taken when you did provision for tax working and other current liabilities. 50-70, what is this? Okay, this you have to take. Increase, so you will add, and hence if I take this 710 plus 100 plus 60 minus 100 minus 20 minus 150 plus 40 minus 195, and there you go 445. You can always refer the printed or the board solution for reference, but this is a fairly basic problem. Okay, then you go to question number 10. Now this is the question where there is a partnership firm. Now in case of a company there is share capital, there is reserves. In case of a partnership firm there is partners capital. Like in a company there is a dividend paid which is financing. Here there can be drawings, but drawings are also in the nature of payment to the provider, and hence drawings can also be in the nature of financing. So from the following balance sheet of Mr. Zen, maybe an individual or a partner, prepare cash flow statement as per AS3 for the year ended 31st March 11. This data is given for Mr. Zen. Additional information is available, and in that you have been given that a machine costing 80,000 with accumulated depreciation of 24,000, which means 80 minus 24, 56,000 will be your return on value, was sold for 40,000, which means there is a loss of around 16,000. The provision for depreciation on 1st April 10 was 2 lakhs and on 31st March 11 was 3 lakh 20. That's fine. The net profit for the year was 3 lakh 60. यार मेरे को करना क्या है? I have to prepare cash flow, and if I have been given only 2 balance sheets, then I'll have to use indirect method. I cannot use direct method over here. So I'll have to start with the net profit. What is net profit? 3 lakh 60,000. See if there is any tax. There is nothing given, so you will take that only. अच्छा यहाँ पे you will have to find the depreciation. So over here you will have, let us say, your PP and provision for depreciation. So within plant 6 lakh 40 at the start, 6 lakh 40 at the end, 4 lakh 40 at the start. But ये तो direct balance दिया हुआ है. If I have to find the total balance, so at the beginning there was a 2 lakh provision for depreciation. So over here my opening will be 6 lakh 40 and 2 lakh for provision for depreciation. Closing में your provision for depreciation becomes 3 lakh 20, which means ये कितना होएगा? 640 and 3 lakh 20, 9 lakh 60, and closing over here is 3 lakh 20. Okay, now a machine costing 80,000 with accumulated depreciation of 24,000 was sold for 40,000. So this is bank account debit. 40,000 will go in my cash flow from investing. In my CFI I will have 40,000. Then provision for depreciation I think is how much? 24,000. Second effect will come over here, 24,000, and there's a loss I believe of 16,000. So over here the loss of 16,000 will be adjusted, must have been added over here. So you will adjust it 16,000, and that is about it. अभी ये अगर अपन बैलेंसिंग फिगर निकाले तो this is what, 320 24 minus 2 lakhs, so maybe 144. का तो बाय द वे डेप्रिसिएशन होगा, 144 will be depreciation, and in your plant 960, and there must be a 4 lakh purchase balancing figure. There is no other adjustment, so this takes care of plant. Other than land, starting का आपका 6 लाख, नहीं मैंने उल्टा कर दिया क्या? First table 10, first table 11, sorry, my bad. Opening was what? पूरा गड़बड़ हो गया. See, this is a place where institute tricks you very much. कभी कभार opening balance sheet at the beginning, closing balance sheet at the end. कभी बार closing balance sheet at the beginning, opening at the end. So this is first table 10 at the beginning. So इसके ऊपर 640 plus 2 lakhs would come to what? 640 plus 2 lakhs would come to 840, and closing में 440 plus, this is plus 2 lakhs plus 3.2 lakhs comes to what? Sir, 7 lakh 60. And sale का तो अभी भी सेम ही एंट्री बैठेगा. All of the other things are the same, I believe. So if I have to do for maybe 80, 760, there doesn't seem to be any asset purchase for plant and machinery. Depreciation अभी भी आपका 1,44,000 है. In land, your opening was 6 lakh, closing is 2 lakh 80, so maybe there's a 2 lakh 80 purchase of land. 2 lakh 80 purchase of land. Inventories. Over here, this is, यार ये एक बार clear हो जाता है. This is decrease in inventory. So 80,000 you will add. Trade receivables. Increase. 1,60,000 you will deduct. Cash opening 80, closing 56. तो यहाँ पे क्या होएगा? 80,000. Add 1,60,000 for trade receivables. Deduct. This is done. अच्छा, Zen's capital is going from 10 to 1224. अभी कैपिटल है तो 10 से इट इज इंक्रीजिंग बाय 3,60,000. 10 plus 3,60,000 should come to 1,360. It is coming to 2024. So the balancing figure must be drawings. 1,36,000. Maybe this is drawings. So when I look at CFF in my cash flow from financing, there will be drawings to the extent of 1,36,000. It is like dividend. Okay, then you have trade payables. क्या हो रहा? So 320 से 352. There is an increase of 32,000. Add. This is Zen's loan. It is repaid. किसी से भी लोन लिया, if it is repaid, it is a part of financing. 2 lakh repaid. And loan from bank 3,20,000 and 4 lakh. So maybe another 80,000 taken. And that is about it. So if I go to see, शायद से ये पूरा खिचड़ी पका है, but 360 plus 16 plus 144 plus 80 minus 1,60,000 and plus 32, maybe 472, 40 and 2,40,000, and this is 136, 2,80,000, 256, 1, 2, 3, 472 minus 240 minus 256. There's a reduction of 24. Is it an actual reduction of 24? Yes. 80,000 minus comes to 56,000. So hopefully this is correct. Maybe the thing over here is maybe being careful regarding drawings, which is unique to a sole proprietor. You get question number 10. Next you go to question number 11. So we'll go to question number 11 now. Again, I think manageable question. The balance sheet of Harry for the year ended 31st March 18 and 31st March 17. Be very careful in the dates. First 18 is given, then 17 is given. It's summarized below, so you have the entire balance sheet. The profit and loss for the year ended 18 disclose the following. So this is similar to one of the questions that we just did. Depreciation on building is 1000, furniture and fixtures 2000, and depreciation in cars 5000. So your total depreciation is 1 and 2 and 5, that is around 8000. One car was disposed of during the year for 3400, whose return on value was 2000, which means there is a gain of around 1400. This is similar, I would say, to your question 6, if I am not wrong, जो आपने try किया था. Purchase investments were 6000, sold investments were 10,000, and those investments costed 2000. So there will again be a gain of around 8000. Now you are required to prepare cash flow statement using the indirect method. Now from the indirect method you will start with 8000 CFO, 8000 profit before tax. Last में हमें tax paid लेना है. Income tax is 3000. Is there any tax payable? Yes. So over here this will be less tax paid. Your opening is 2 plus during the year another 3 and closing is 3. So maybe आपका tax paid आएगा 2000. So this is 1, 2 and 3 taken care of. Okay, so this is your tax paid. Now you will also look at your CFI etc. तो ये आपका start हुआ. So step 1 is prepare the format. In the format last में you will obviously write the opening and closing cash and cash equivalents. This is 12 and 17. So opening में आपका 17 है, closing में आपका 12 है. And then you start working around. So one by one, share capital 1 lakh say 1,20,000. So over here this is CFF, this is equity shares, and then this is, how much is your equity shares? Equity shares are 20,000 increase, और कोई adjustment है नहीं यहाँ पे. Next you have profit and loss 8 से 9. Basically I've taken tax, I've taken PBT. 4,000 का declared dividend लेना है. Declared dividends 2,000 at the beginning, 4,000 at the closing. So if I were to prepare the dividend account, you'll have 2,000 at the beginning, 4,000 at the closing. During the year 4,000, and hence the balancing figure is 2,000. So maybe your dividends paid are 2,000. Done. Acha, next you have trade payables. So trade payables are what? 5 and 8 increasing. So ये अपन क्या करेंगे? Sir, add. Increase in trade payables, add. Then you have building. अच्छा, ओपनिंग में 20 था, क्लोजिंग में 19 हो गया. दैट इज ड्यू टू 1000 डेप्रिसिएशन. 1000 आपका डेप्रिसिएशन है, देयर इज नथिंग एल्स. फर्नीचर 2000, ओपनिंग में 22, क्लोजिंग में 34. नाउ इफ आई वर टू प्रिपेयर द अकाउंट 22, क्लोजिंग में 34, ड्यूरिंग द ईयर डेप्रिसिएशन ऑफ अराउंड 2000, एंड हेंस द बैलेंसिंग फिगर 36 माइनस 22 कितना आ रहा है? 14. दिस इज 14,000. Can I say furniture purchased? Cars 16 से 25. So when I look at the car account, my opening is 16, closing is 25. During the year, a car has been sold and depreciation is 5,000. Car has been sold with WDV of 2,000. 5,000, 2,000 का WDV है, and hence the balancing figure over here will be what? 25 and 5 and 2 minus 16, maybe 16,000 another. ये 16,000 गया. अच्छा, फर्दर देर इज अ गेन. देखो डेप्रिसिएशन 1000 प्लस 2000 प्लस 5000, ये 8000 का डेप्रिसिएशन एड बैक करेंगे. फर्दर देर इज अ गेन ऑफ 1400 जो अपन लेस करेंगे. ओके, नेक्स्ट यू हैव इन्वेस्टमेंट्स. 28 से 32 हो जा रहा है. अब यहाँ पे परचेज ऑफ इन्वेस्टमेंट इज 6000. CFI परचेज ऑफ इन्वेस्टमेंट 6000 and sold investments of 10 costing 2. तो यहाँ पे आपका 10 आ जाएगा पॉजिटिव. 8000 का गेन है. व्हाट विल यू डू? यू विल सबट्रैक्ट दैट गेन. जस्ट अ सेकेंड. यहाँ पे यू विल सबट्रैक्ट द गेन. 8000 का गेन सबट्रैक्ट. ओके, दैट्स अबाउट इट. अभी इन्वेस्टमेंट अगर रिकंसाइल करने जाए तो इन्वेस्टमेंट 28 plus you have purchased investments worth 6, 34 minus WDV of 2, 32,000 reconciled. Inventory 8 से 14 well increase हो रहा है, you'll have to subtract 6,000 subtract. Trade receivable 6 से 8 increase हो रहा है, 2,000 deduct, and that's about it. This is 8 plus 8, 16 minus 8, 8,000 minus 1,400 plus 3,000 minus. Is it a negative 400 by any chance? यहाँ पे आपका CF 14, 16, 6, maybe 26,000 negative, and CFF is 18,000 positive. एक सेकेंड, गड़बड़ हुआ है कुछ. Maybe 400 negative, 26,000 and 18,000. I think I've missed out something somewhere. I think sale proceeds I've missed out. 3,400 sale proceeds in cash flow from investing. तो ये आपका 26,000 and 3,400, 22,600. वापस 5,000 and that's about it. तो ये कोई खास इंपॉर्टेंट नहीं है, बट नेवरदलेस that is question number 11. Question number 12 and a similar, I would say last में. You do question number 22, I believe, at the end is similar to this. So when you do 12, 22 automatically gets done. This is on direct method. On the basis of the above information, required to prepare cash flow statement for the year ended 31st March 17 using the direct method. Same problem, same data is there in 22. A company provides you with the following information: total sales for the year worth 398 crores, out of which cash sales is 262. तो CFO आपका 262 आएगा. Receipts from credit customers during the year is 134. Cash sales plus collection from debtors. Purchases for the year amounted to 220, out of which credit purchases were 80%, which means remaining 44 were cash purchases. Balance of creditors were, so you'll have opening plus 220 into 80%, 176 minus 92, 84 plus 176 minus 92 comes to what? Maybe 168. Suppliers of other consumables were paid 19 crores. Paid 19 crores. Khatam. Employees of the enterprises were paid 20 crores. Paid 20. Fully paid preferences of face value 32 crores were redeemed. Equity shares of face value of rupees 20 crores were allotted at fully paid at a premium of 20%. You have to find the entire cash flow statement. So over here, if the redemption happened in cash, I will say CFF minus 32 and 20 plus 20%, 24 positive. Debentures of 20 crores at a premium of 10% were redeemed. Debenture holders were issued equity shares in lieu of their debentures. So इसका कोई effect ही नहीं आएगा, because here you have been told that they were issued equity shares in lieu of their debentures, which means it is not a payment in cash. 26 crores was paid by way of tax. This is minus 26. A new machinery costing 25 crores was purchased in part exchange of an old machine. The book value of the old machine was 13 crores. Though through negotiations, the vendor agreed to take over the old machinery at a higher value of 15 crores. So there is a gain on barter of around 2 crores. But remember, you are following direct method. Under direct method, you don't have to adjust this depreciation, gain, loss. You can directly take what is a direct cash flow. The balance was paid in cash to the vendor. So how much must be paid? 25 का machine है, minus 15 agree किया तो 10 पे हुआ रहेगा. This is CFI minus 10. Your entry would have been asset account debit 25, to bank 10, to old machine 13, to gain on sale 2. Investments costing 18 crores were sold at a loss of 2 crores. So that means 16 में बेचे हो गया. Dividends amounting to 15 crores, including dividend distribution tax of 2.7 crores were also paid. So this will be 2.7 for dividend. Debenture interest amounting to 2 crores were also paid. 2 crores for debenture interest. And on 31st March 16, balance in cash and bank was 2 crores. This was at the start of the year. 2 crores. So over here, if I were to take the CFO, maybe 262 plus 134 minus 44 minus 168 minus 19 minus 20 minus 26, maybe 119. In CFI plus 6, 119 plus 6, and CFF 32 negative 24, 2.7 and 2, maybe 12.7. So over here, this is what? 112.3, जिसके ऊपर आपका अगर ओपनिंग आप ले लो was around 2 crores. So this is 114.3. एक बार इसका देखते कुछ मिस आउट तो नहीं हो गया ना. 12, yes. This was our question. This is 119 बराबर 6 बराबर 25 negative. I think I've missed out something. Dividend they are saying is 15. किधर है? अच्छा, dividend is 15. Sorry, my bad. It's not 2.7. Dividend was 15. 2.7 तो यहाँ पे सिर्फ dividend distribution tax था. सिर्फ calculation mistake था. So this is 32 plus 24 minus 15 minus 2. This is 25. And if I take 25 over here, negative 119 and 6 and all of this will come to 100 rupees. 102 will be your closing balance. Okay, so if you go to see पीछे अगर आप देखोगे, this question number 21 I think, not 22. This is similar to question number 12. If you go to see, देखो आपको सब same total sales, receipts, purchases, other payables, employees, everything remains the same, and hence you can take the same adjustment. This is from a recent RTP. उसके बाद तो होमवर्क सेक्शन आपका चालू हो जाता. जस्ट बिफोर दैट यू हैड अ कपल ऑफ अदर क्वेश्चंस, तो बीजे के क्वेश्चंस भी उड़ा लेते. देन इन द मिडल विच एवर आर द अदर रिमेनिंग एंड इंपॉर्टेंट क्वेश्चंस विल फिनिश दैट. क्वेश्चन 19, दिस इज सिमिलर टू क्वेश्चन नंबर 1 ऑफ वॉल्यूम 1. क्लासिफाई बिटवीन ऑपरेटिंग, इन्वेस्टिंग, फाइनेंसिंग एंड कैश इक्विवेलेंट्स. ब्रोकरेज पेड, इन्वेस्टिंग, अंडरराइटिंग कमीशन, फाइनेंसिंग, ट्रेडिंग कमीशन, ऑपरेटिंग, sale of investment, investing, goodwill, investing, redemption of preference shares, financing, property held as investment, investing, interest paid on long-term borrowings, financing, marketable securities having risk of change in value, then this is investing. Had there been no risk of change in value, it would have been a cash equivalent. And refund of income tax, operating. That is question number 19. Next you go to question number 20. How will you disclose the following items while preparing cash flow statement for Gagan as per AS3 for the year ended 31st March 12? 10% debentures issued, 1,10,000 था, at the end becomes 77. So had there been no other adjustment over here, this is a reduction of 33. This would go under financing. But यहाँ पे कुछ और है. Debentures were redeemed at a 5% premium at the end of the year. Okay. So this is a reduction of debenture 33, but they were redeemed at premium or charged to the profit and loss account for the year. So what is your total amount? For example, I mean, assuming 33,000 plus 5%, can I say 34,650? So when I look at the payment over here will be 34,650 in my cash flow from financing. 33,000 तो redeem हुए, But that is a ledger balance of debenture. They are redeemed at a 5% premium. 33,000 plus 5% comes to 34,650. And this has gone in the profit and loss. So this, I believe, 1650 was there in the profit and loss. However, it is financing in nature, so we will have to add it back. Unpaid interest on debentures was 275 and then is 1175. Yeah, what is the interest throughout the year? This redemption happened at the end. So over here, maybe starting my 275 plus interest, that is 1,10,000 into what is the rate of interest? 10%. That is 11,000 minus 1175 still not paid. So 275 plus 11,000 minus 1175 comes to around 10,100. This is interest paid. Again, financing in nature. In my PNL, 11,000 will go. However, as payment, 10,100 will go. Debtors of 36,000 were written off against provision for doubtful debts during the year. This is non-cash in nature. This is non-cash. Your entry must be provision for doubtful debts account debit to debtors. 10% bonds, which are investments. 3,50,000, 3,50,000. So there is no change. But accrued interest on the investments is 10,500. Accrued interest. So ideally, 3,50,000 into 10%, you should have received 35,000. But at the end of the year, 10,500 is still accrued, and hence 24,500 must be received. So if I go to see, यहाँ पे क्या होगा? At question number 20, maybe if I am doing CFO using indirect method. In my indirect method, whatever is the premium of 1650, I will add back. Interest of 11,000, I will add back. This is interest expense. Interest income of around 35,000, I will subtract. In CFI, income received of 24,500, I will add. CFF, redemption of 34,650 and interest paid of 10,100. So this should ideally take care. ये जिधर भी किया रहेगा, maybe, yes, 1650. This was probably question number, what was this? 19. 1650. Then 11,000, 35,000, 24,500 must have been received, 34,650 and 10,100, and that is about it. Are we clear with this? Yes. So 19, 20 done. 21 also done. It's kind of similar, and hence you are left with a few other problems. We'll probably discuss, I think, problems remaining from question number 13. So 13, 14, 15, 16, 17, 16 उसमें भी एक आधा practice है और 18. So there are 6 other problems, out of which 2 of them, I think 1 or 2 of them are practice problems, and the other 4 of them are important problems. So let us get started. Okay, so let us review question number 13. This is a November 20 paper, and there are quite a bit of adjustments here. Following figures have been extracted from the books of Mananjo Limited for the year ended 31st March 2020, and you are required to prepare the cash flow statement using the indirect method. They have clearly told you that. Now, net profit before taking into account income tax and income from lawsuits, but after taking into account the following was 30 lakhs. So this is before income tax and before income from lawsuits. Income tax ke liye tax paid will show separately, and income, if any, from lawsuits will show it separately as an extraordinary item. Depreciation on property, plant and equipment of 7.5 lakhs. So we'll start with 30, and under indirect method, depreciation will add back 7.5. Discount on issue of debentures written off. This was written off. So this is 0.45. Again, I will add back. Interest on debentures paid of 525. Again, this is financing in nature. We'll add back over here and subtract in financing. And book value of investments of 4.5 lakhs. Sale of investments was 4.8 lakhs, and as a result, there is a 30,000 gain, and this is plus 0.3. Interest received on investments of 90,000, and this I will subtract 0.9. Fair, so you will add less all of these items. Compensation received of 1,35,000 for a lawsuit filed. This is an extraordinary item, which I will show along with my CFO right at the bottom. Income tax paid during the year 1575. Again, this is 15,75,000 to be shown right at the bottom. Now this is operating, this is also operating. 22,500, 10% preference shares of rupees 100 each were redeemed on 2nd April at a premium of 5%. So over here, this is what? 22,500 into 100 into 1.05, and this is 23 lakh 62,500. This is CFF. Further, company issued 75,000 equity shares of rupees 10 each at a premium of 20% on 30th March. Out of the 75,000 equity shares, 25,000 equity shares were issued to a supplier of machinery. So in my cash flow, I will only have 50,000 equity shares at a premium of 20%. So this is 50,000 into, I think, 12 rupees. That comes to, I think, 6 lakhs. This is your cash flow from financing, CFF. Dividend for 18-19 on preference shares was paid at the time of redemption. So this is dividend of 22,500 into 10%. So this is 2,25,000. This is also cash flow from financing. This is paid. Dividend on equity shares paid on 31st January 20 for the year 18-19 was 7.5 lakhs including DET and interim dividend for the year 19-20. So your total dividend paid was 10 lakhs. This is also CFF. Land was purchased on 2nd April for 3 lakhs, for which the company issued 22,000 equity shares of rupees 10 each at a premium of 20% to the landowner, and the balance in cash. So how much is in cash? 22,000 at a premium of, so 22,000 into 12, maybe 264 minus 3 lakhs. So can I say 36,000 will go in your cash flow from investing. Current assets and current liabilities at the beginning and the end of the year were as follows. Inventory. So if I go to see, there is an increase. So 1,77,000 I will deduct. Trade receivables 387 and 379, 650. There is a decrease, and hence you will add 7350. Cash in hand, you will show it as it is. Trade payables, there seems to be a slight increase of 450. You will add. And outstanding expenses 1,12,500 minus 122,700. This will be 10,200. You will add. So this, if you go to see, is your solution for question number 13. As you can see over here, for Manan and Geo, you started at 30. All of these adjustments you did. Interest of 90 and 30 you subtracted. You came to 42. All of these adjustments are done and you get cash flow. Sale of investments 4,80,000, interest income 90 and 36,000, as you can see over here. So over here 36,000. Then you have एक सेकंड, इंटरेस्ट इनकम रिसीव्ड ऑफ 90 एंड यहाँ पे इन्वेस्टमेंट आपने बेचा था, बुक वैल्यू ऑफ इन्वेस्टमेंट सोल्ड 4,80,000. दैट विल कम ओवर हियर एंड देन 1 2 3 and maybe 4. These 4 items will go in your 1 2 3 4. Issue of equity shares, 4 cash, 6 lakhs, preference dividend paid, preference shares redeemed, interest on debentures separately, which was there at the beginning, which is there, and then dividend. The only thing over here is this extraordinary items, compensation from this lawsuit will be shown separately at the end. So this kind of takes care of question number 13. Next you go to question number 14. Over here you have the balance sheets and you are required to prepare cash flow statement for Ryan. Largely it is manageable. You look at this fairly big balance sheet. Again, all the assets and liabilities given, and then there is additional information. Now there are a few interesting adjustments in this. First, a piece of land has been sold for 1,50,000, which is costing 1,20,000. So this 1,50,000 will be your cash flow from investing and 30,000 will be the gain, and the balance land was revalued. Capital reserve consisted of profit on revaluation of the land. So over here a land was sold and the balance land was revalued. So whatever is the change in the capital reserve, if I go to see in my balance sheet, 70,000, that is attributable to this appreciation. So when I look at this particular question, यहाँ पे क्या है? You have land and building. Starting I think there was 1,50,000. No, again the same problem. Starting it was 2 lakhs. It became 1,50,000. And in this we were saying that a plot of land, just a second, you started at 2 lakhs, came to 1,50,000. A plot of land of 120 was sold for 150, so there was a 30 rupees profit gain. Other than that, there was a revaluation worth 70, land account debit to revaluation. So if I now go to see 200, 30, 70, and yes side, can I say maybe there is a 100 rupees purchase of land over here? Maybe there's a purchase of land somewhere. So if we can find that question, just a second. You're searching for question number 14, I believe. Yes, 14 here you have. So when I look at this, we will say that in my land account 2 lakhs was there, 30,000 ka gain which went to the PNL, 70,000 capital reserve. Opening there was a sale of 1,50,000 and 1,50,000. If I go to see, just a second, 150, 150, नहीं तो दोनों जगह पे 300 आ जाएगा, and hence the account clearly balances. So adjustment number 1 done. On 1st April, a plant was sold for 90 with the original cost of 70 and WDV of 50. So maybe this is sold at a profit of 40,000, and debentures worth 1 lakh were issued at par as part consideration for plant of rupees 1.5, 4.5 lakhs acquired. So there are two transactions. In my plant account, I will say, what is my opening balance in my plant? 5 lakhs. Closing balance is 765. So if I look at my opening balance, this is 5. Closing balance is 7,65,000. If I look at plant, maybe plant gets depreciated as well. Okay, we'll probably find that. But over here, this is a plant of 90 sold. 50 was the WDV. So maybe 0.5 will come over here. Other than that, another plant worth 4.5 was acquired. Now in this 4.5 ka plant, 1 lakh was using debentures, the remaining 3.5 was using cash. So that 3.5 we are going to review over here in our cash flow statement. That will go in cash flow from investing. And I guess that should be it. So this is 5 and 1 and 3.5. And on the other side 7.65 and 0.5. So maybe 1.35 is remaining, which may be due to depreciation. 1,35,000. This is 9 lakh into 15%. Maybe I get the, but otherwise we would have found this as a balancing figure. Now in my cash flow, what will I take? Well, in my cash flow, there was a sale of land was 150, sale of plant of 90. There's a plant purchase of 3,50,000, which is there in cash. There's a gain on sale of land at 30,000 and gain on sale of plant at 40,000. ये दोनों हमें निकालना है. Land 30, plant 40. Okay. So adjustment 2 is also done. Part of the investments costing 50,000 were sold for 70,000. There is a gain on sale of investment of 20,000. This will also come over here. 20,000 gain on sale of investment, and 70,000 will be your cash flow from investing activities. Investment also done. Pre-acquisition dividend receipt of 5,000 was adjusted against the cost of investment. So that is fine. You may have adjusted this against cost of investment. So when I look at your investment balance, where is the investment balance? Okay, 50, 80. Starting में क्या है? 11. And this is 10. So you started at 80, ended at 50. There was an investment, I believe, which was sold, which is worth 50. So 70 and gain of 20. And there was a 5,000 pre-acquisition dividend, which is adjusted against the cost of the investment. This is bank account debit to investment, and this will go in my investing activities. Achha, is there anything else? No. So probably you will see if there is any balancing. So this is what? Maybe 25,000 purchase of investments. So if I go to see over here, investments. You can see 25,000 as purchase of investment, and pre-acquisition dividend has to be reduced from cost, so there's no problem in that. So over here you will have pre-acquisition dividend and purchase of investment, and that is about it. Okay, so this is a fairly big question. Interim dividend declared and paid at 15% during the current year. So this is your equity share capital, 5 lakhs becoming 6 lakhs. Now when was this new shares issued? We don't know. We'll have to review that. Is there anything given on those lines? Income tax liability for the current year was estimated at 1,35,000. This is your income tax expense of 135, and depreciation of 15% is charged on plant, but no depreciation is being charged on building. So that is fine. So now when we go to see the question over here, you have share capital 6, 7 say 6, and that is preference shares getting redeemed and new equity shares being issued. So over here you will go to see there will be maybe a 2 lakh redemption, 1 lakh issue of equity shares. So there is a reduction in capital base. There may be a CRR of 1 lakh which is created. So over here issue of equity shares 1 lakh, redemption of preference shares 2 lakhs. Okay, fair enough. Abhi dividend will be 15% of what we will have to assume कि भाई कभी वो redemption हुआ है, and accordingly we will have to solve. So we'll assume that the redemption happens at the beginning. So over here dividend आपने क्या लिया हुआ है 90,000. So this is 6 lakhs into 15%. So maybe this is 90,000, assuming that this is at the beginning. Okay, I think the problem over here is in this question net profit is not given. So over here you have to find the net profit, but there is, let us say, CRR of 1 lakh created. 70,000 is not against any PNL. It is building account debit to capital reserve on revaluation. CRR must be adjusted against the reserve. Now this is general reserve of 2 lakh 50 falling to 1 lakh. So maybe your entry over here will be general reserve account debit to CRR of 1 lakh, and hence this does not impact the profit and loss. Within profit and loss, starting में 50 था, end में 1 lakh हो गया. So there is a change in reserves of 50,000. However, there was a dividend of 90,000 as well. So if I want to find the profit over here, how will I do that? So I will say profit after tax. There's a working note. I have said that in profit after tax 50,000 was there, 1 lakh was a closing, so 50 tha, but there was a 90,000 dividend. So 50 and 90, maybe 1 lakh 40 will be my profit after tax. To this there's a 1 lakh 35,000 income tax liability, and hence 2 lakh 75,000 will be my profit before tax. Okay. Next, we have taken all reserves, we have done their analysis. Long term borrowings earlier was 0, now is 2 lakhs, but within that 1 lakh of debentures were issued for other than cash. So maybe the remaining 1 lakh were issued for cash. Remember, you were told that plant was issued by issuing 1 lakh worth of debentures. So जो remaining 1 lakh worth of debentures है वो यहाँ पे आएगा debentures issued 1 lakh. Okay, this is done. Trade payables over here, this is increasing by 5,000. You will add other current liabilities. Maybe 80 से 30. What is this other current liabilities? Dividend payable 60 था, वो 0 हो गया, so 60,000 payment will come. Liability for expenses 10 से 30, so this will be added plus 10,000. For tax, this is 60,000 plus 135 during the year minus 95. So maybe 1 lakh must be paid. If I go to see, maybe your tax paid would be 1 lakh. Okay, further trade payables, other liabilities will come over here. On the asset side, PP we have taken care of. Investments we have taken care of. Inventories, there seems to be an increase of 5,000 which you will deduct. Trade receivables, increase of 25,000 which you will deduct. And other current assets, have you been told what that is? No, we'll assume it is operating in nature, again like prepaid expenses, and hence if there is an increase of 35,000 we will deduct. So 5, 25, 35. You will have 5, 25, 35, and that is about it. So there are a lot of adjustments over here, but if you give those adjustments properly, hopefully your cash flow statement should reconcile. That is question number I believe 14, a fairly detailed question. You'll definitely want to practice this. We have marked that as important for last day revision as well. Now we'll go to question number 15. Now the balance sheet of New Light as on 31st March 11 and 10 is as follows. So you have the balance sheet as on 31st March 10 given first, year 0, 11 given later, year 1. Now you have all of these particulars being given and then you have been told additional information. The additional information over here, 0.12345 is okay. 0.6 is a tricky one, which is there for this and this question only. The company decided to value inventory at cost, whereas previously the practice was to value it at cost less 10%. So that is a wrong treatment. The inventory according to the books on 31st March 10 was 2,16,000 and the inventory on 31st March 11 was correctly valued at 3 lakhs. So there is an error in the inventory as on 31st March 10 and hence you will have to rectify. Now this is 2,16,000. This is your opening inventory. This is equivalent to 90. Then 100 is how much? So 216 divided by 90 into 100. So this is 2,40,000. So your opening stock will increase by 24,000. But the second effect will go where? Well, if your stock increases, well, that is closing stock of the last year increases, the profit will also increase. And as a result, over here, we will have to make an adjustment in 2010, whereby we will increase the inventory. If we can see over here, we will increase the inventory by 24,000. I don't see a breakup over here, so we'll take 24,000 directly against other current assets. And secondly, आपके जो reserves है starting में, they will also increase by 24,000. So your entire updated working will be based on 8,64,000 of reserves as well as 11,34,000 of other current assets. Okay. Then the company sold one fixed asset for 1 lakh, the cost of which was 2 lakhs and depreciation was 80,000. So this is a 20,000 loss. Company also decided to write off another fixed asset of 56,000 on which depreciation of 40,000 had been provided, another 16,000 of loss. 56 minus 40, that is 16,000 would be there in your ledger which you are writing off. Depreciation on fixed assets was 3,60,000. So all of these are adjustments against PP. Company sold investments at a profit of 40, which was credited to capital reserve. Okay. So profit of 40 goes to the capital reserve. It did not go to the P&L. So we don't have to remove it. But kitne investments beche? If I go to see, your investments sold are maybe 4 lakhs. So there is an 80,000 WDV of investment sold at a profit of 40, which means 1,20,000 will be there as a cash flow from investing. Debentures and preference shares are redeemed at a 5% premium. So over here, debentures and preference shares, when they were redeemed, so if I go to see how much is preference shares redeemed, 1,20,000 at a 5% premium. So this will come to what? 1,26,000. And debentures 4 lakh and 2,80,000. Again 1,20,000 at a 5% premium, 1,26,000. So when I go to see over here, question number what? I think 15. So in 15, if I go to redemption of preferences 126, redemption of debentures 126. Okay. Again, if you look at cash flow from investing, sale of investments 1,20,000 हमने discuss किया. Okay. Then this 6,000 and 6,000 premium would have gone where? Well, when I look at the reserves, general reserve is going from 6 lakh to 7,60,000. So maybe you're transferring 1,60,000 from the profit and loss, and then there is a profit and loss balance going from 2,40,000 to 3,40,000. Now the problem is you have not been given the profit during the year. So you'll say your opening is 2,40,000, your closing is 3,40,000. Now during the year, clearly there's a transfer to the general reserve of 1,60,000. Is there any other dividend or anything given? So here 240, 340 and there's a 160 transfer. Is there any dividend? Well, starting with 120 tha, ending mein kuch hai nahi, so the dividend must be paid. So there is 120 of dividend payment of the last year. In the current year, is there any data given regarding dividend? No. Which means you take this. Sir, but ek galti apne bhul gaye aap. this 240 is not correct. If your opening reserves were 24,000 higher, maybe your profit and loss instead of 240 at the beginning adjusted should be 264. And hence when you do the working, this is where you would have possibly made a mistake. Over here, you will take 2,64,000, that is the adjusted balance. And based on that, आपका profit of the current year निकलेगा 160, 340 and 264. Can I say 2,36,000? So when I go to see, this is probably one of the most important adjustments over here. When you look at profit and loss, your opening balance was 264 and thereby 236 would be the profit for the current year. This must be after tax. So this is 2,36,000. You will see if there is any data which is available regarding tax. Well, you have been told that your provision for tax was 340 at the beginning, 360 at the beginning, 340 at the end. So maybe you can assume that 360 which was there at the beginning must have been paid and 340 must be the expense of the current year. So the opening must have been paid in the current year and 340 must be for the current year. So your tax paid will be 360, the opening balance, and you add back 340 to get 5,76,000. Opening provision paid and closing is still to be paid. Okay, so that is taking care over here. Now when you look at which question were we at? Yahi ghum gaye. Acha, when we are looking at this question, where were we? You were discussing regarding the items where we will look at, for example, the profit workings. Next, you will take every item. Share capital 16 and 1880. Well, share capital over here 12 से 16 हो रहा है. So there's a 4 lakh issue. Redemption we have already taken. So there's a 4 lakh issue. 4 lakh issue of equity shares. Redemption we have already taken. Next you have what? One by one. It's a fairly big question. Redemption we have already taken. Reserves we have already considered. Borrowings again we have already considered. Other current liabilities, if I look at note 4, within the other current liabilities, dividend of 1,20,000 will come within the financing, and this 480, 520, जो भी difference है, increase of 40,000 will be as a part of working capital adjustments. So if you see over here, 1,20,000 will be dividend paid, and working capital adjustments में 40,000 will come. Okay, next you will go to PP. Now PP there's a lot of adjustments. 20 to 80 coming to 2640. Well, within that, if you go to see the ledger for PP 22, where is PP ledger? 22. अच्छा, यहाँ पे provision for depreciation अलग है. Maybe they've given over here. अच्छा, 32 and 38, 920, 11,60,000. Fair enough. So over here what is happening? 32, 38, 920, 11,60,000. Now over here there is a sale. Sale happens where 1 lakh में बेचा आपने. Provision for depreciation was 80,000. Loss is 20,000. And 80 will come over here. 20 will go in your cash flow from operations. You will say minus or plus this लॉस ऑन सेल ऑफ बीपी, ये 6,000 और ये 6,000 हमने लेके रखा है ऑलरेडी. कैश फ्लो में वॉट एवर यू आर सेलिंग, आई थिंक 80,000 विल गो फ्रॉम कैश फ्लो फ्रॉम इन्वेस्टिंग. द 80,000 ओवर हियर विल गो इन योर कैश फ्लो फ्रॉम इन्वेस्टिंग, और 1 lakh that you are selling is going on cash flow from investing. अच्छा, then you will have another 40,000 scrapped off. 16,000 will further go over here. जो scrap में हुआ 16,000 will further go over here. And then if there's a balance figure 8,56,000, that is purchase. So in your cash flow 8,56,000 is purchase, and in the provision for depreciation 3,60,000 is the current period depreciation. A very standardized adjustment if I go to see over here. Investment वगैरह का हो गया. In debentures we are assuming redemption happened at the end, तो आपने interest record किया 36,000, that same interest will be paid over here 36,000. अच्छा, and then investments we have done, I believe. PP हो गया, investment हो गया, cash we would have taken, and this is what 11 lakh 10 plus 24 at the start minus 11 lakh 50. Can I say there is an increase or decrease as a case maybe of 16,000 only? तो ये जो adjustment आएगा, this is only a 16,000 adjustment. Over here, the adjustment will be done for 16,000. I think there is an increase in current assets and hence you will deduct. And that is about it. So this takes care of question number 15, which has some good adjustments, especially the change which was there in question number 15 for the inventory is an important adjustment. Aja, next you have question number 16, which is a pure practice question. I would say there is nothing new over here. You have to prepare cash flow using indirect method. You have been given a statement of cash flow. ऐसा सम हमने काफ़ी करके रखा है. Add profit less retained earnings. So over here this is a pure practice question. You can say this is similar to question number 6 as well as question number 9. You have these items. You have the statement of profit and loss account and you have the statement of retained earnings. यहाँ पे तो gain on loss on sale of asset भी separately नहीं दिया. So you can just practice this and get done. There's nothing remotely complex over here. Okay, then you have 17, which is more linked to accounting ratios. If you have done that, you will understand it. Otherwise, I'll do 18. Then, when you do accounting ratios in your FM, let's say, which is in group 2, maybe, then 17 can help. So, Institute has, I think, probably not considered it as much. But upon 18 kar lete, then we'll do 17 and then we are wrapped up. The following are the changes in the account balances taken from the balance sheets of PQ Limited at the beginning of the year. So, this is given to you as changes in the balances. Okay, equity share capital, 30,000 shares of rupees 10 each, fully paid. There is no change, zero change, so it will not impact the cash flow. Capital reserve is increasing by 49,200. So there's a change in the capital reserve. 8% debentures. Credit is in brackets, increasing by 50,000. This will be cash flow from financing. So if I look at question number 18, I believe. So there will be a cash flow from financing, usually of 50,000. आगे देखेंगे if there is any problem here. Okay, debenture discount. So maybe this is issued at a discount and hence your net 49,000 must be received. Freehold property at cost or evaluation changing by 43,000. So this is a net change of freehold property by 43,000 and plant and machinery at cost by 60,000. That is a net change. Maybe that is new machinery purchased. Depreciation on plant and machinery 14,400. So this is 14,400 of depreciation coming here. This is increase in the provision for depreciation. अच्छा पूरा क्वेश्चन एक बार पढ़ लेते. Trade receivables 50,000 increase, inventory and work in progress 38,500 increase, trade payables. All of these three are working capital adjustment. Net profit 76,500. This is net profit for the year. This must be after tax. Dividend paid in respect of the earlier years, but still it is paid, so this will be financing. Provision for doubtful debts 3,300. This is a net increase. And trade investments at cost 47,000 net increase. And bank में net reduction हो रहा है आपका 64,300 का. What are you given? Point 1, capital reserve as at the end of the year represented realized profits on sale of one of the freehold property. So there is realized profit on sale of one of the property together with surplus arising on revaluation balance of the properties. So when you look at the capital reserve, this is 49,300. That is an increase. This is a cumulative increase on account of revaluation as well as sale of property. When you sold the property, your entry must be bank account debit, whatever is the amount, to property, to capital reserve. And then when you looked at revaluing, your entry is still property account debit to capital reserve. So when I look at the property account, can I say ultimately whatever is my property account, whatever is my freehold property, I don't know, that property account will be debited and सामने to capital reserve 49,200 will be credited. अच्छा बट सामने मेरा फ्रीहोल्ड प्रॉपर्टी बढ़ कितने से रहा है 43,000 से and hence there would be a net difference 49,200 and 43,000. There's a net difference of 6,200. This must be my sale proceeds. So if I go to see over here, when I look at question number 18, I say that देखो freehold property में क्या हो रहा है. I don't know what the opening balance is, I don't know what the closing balance is, but I know that this is increased by 43,000. On sale and revaluation combined 49,200 का debit आया होगा, and then 6,200 would be my sale proceeds, which will go as cash flow from investing. As you can see, 6,200 will be cash flow from investing. Okay, during the year, plant costing 18,000, against which depreciation provision was 13,500, was sold for 7,000. So maybe 18 minus 13,500 comes to what? 4,500. Sold at 7,000, which means there is a gain of around 2,500. So we will take the gain of around 2,500, remove it from here. देखो पहले का प्रॉपर्टी का गेन तो कैपिटल रिजर्व में गया, so it has not gone in the profit and loss account, and 7,000 will be adjusted here. Okay, during the middle of the year, 50,000 of debentures were issued for cash at a discount of 1,000. So 49,000 will be there in our cash flow from financing, and the net profit for the year after crediting profit on sale of plant and charging debenture interest. So that is your 76,500 net profit is after all of this. You are required to prepare a statement which will explain why bank borrowing has increased by 64,300 during the year. So over here 49,200 हमने consider किया, 50 and 1 also consider किया, freehold property also considered. Now plant, there is a 60,000 increase. So if I were to prepare my plant account, now in my plant account, what is happening? I don't know what the opening is, I don't know what the closing is, but I know that there is an increase of 60,000. Now during the year there is a sale of plant which is costing. What is the original cost? Well, it is costing, I believe, 20,000. ये हमने remove कर दिया over here, and then 78,000 must be the purchase. Further, there is a provision for depreciation where your net increase is 14,500, but during the year 13,500 is removed on account of this entry, and then 27,900 will be my provision. So यहाँ पे if you go to see 27,900 will be added back on provision. You are just taking the net debits or net credits, and 78,000 for the property. अच्छा आगे देखते हैं. When you look at 1, 2 and 3, this is direct working capital adjustments. यहाँ पे तो कोई भेजा पड़ी नहीं करना है. 1, 2 and 3 direct working capital adjustments as it is. Increase in trade receivables deduct, increase in inventory deduct, and increase in trade payables add. Okay, net profit you would have taken starting में, dividend paid for the earlier year, financing, provision for bad debts, non-cash in nature, you will add back 3,300 change, and trade investment at cost. If you are purchasing at 47,000, that will be a fine investing activity. 47,000 हमने purchase किया. This is non-cash, you will add back. Depreciation added back. Debenture interest must be middle of the year. Debentures का data दिया हुआ है. You have been told that at the middle of the year, during the year 50,000 debentures were issued. So debenture interest will be 50,000 on face value into 8% into 6 by 12, and hence that will be around 2,000. That is 2,000 over here, and 2,000 will be taken in the payment. Other than dividend paid and debentures issued, and that is about it. So इसके वजह से आपका net changes in cash and cash equivalent is a negative 64,300, and hence you might have to take a borrowing of 64,300. So the challenge in this particular question is you have not been given the opening and closing balances, but we have been given the net increase or net decrease. So rather than showing the opening separately and closing separately, if there's a net increase, that is a net closing balance on the debit for a plant. If there's a net increase or closing balance is higher, you will show that extra, and accordingly you will solve. And now if you have not done accounting ratios, you can skip the video for now, but if you have done, we'll quickly review this, and you will apply accounting ratios, and that is when question 17, and that is the last question, gets done. Now given below are the condensed balance sheet of Lamba Kidi for and the profit and loss. You have been given the balance sheet 2015, 2014, equity shares, redeemable preference shares, CRR, general reserve, profit and loss, debentures with a convertible option, other term loans, fixed assets at depreciation, long-term loans, and working capital. The entire P&L statement given over here, you have loss on sale of equipment, interest income, dividend income, foreign exchange gain. All of these are non-operating in nature. Damages for loss of reputation seems to be extraordinary in nature. Depreciation, taxes, dividends and net profit carried to the balance sheet. You are informed by the accountant that ledgers containing trade receivables, trade payables and inventories for both the years were seized by the income tax authorities and would take at least 2 months to obtain copies of the same. He is able to furnish the following data. You have dividend receivable, interest receivable, cash on hand, investments maturing in 2 months. Okay, so this must be like a, maybe you can take as cash equivalent, I'm not sure. Interest payable, taxes payable. All of these are non-operating in nature. Current ratio and asset test ratio. Current ratio is current assets by current liabilities, whereas asset test ratio is quick assets by current liabilities. Quick assets does not include inventories. But दोनों में denominator तो current liability है. It is also gathered that the debenture holders owning 50% of debentures outstanding as on 31st March 14 exercised the option for conversion into equity shares during the financial year and the same was put through. Now you are required to prepare a direct method cash flow statement for the year 2015 in accordance with AS3. So you have to prepare a direct method cash flow statement, but for the direct method you need cash collection, sales, but I don't have trade receivables. For direct method cash flow, I need cash payment to creditors, but I don't have trade payables and I don't have stock. So basically these three things I can find using these ratios, and ये पूरा question आपको यही दो ratios के ऊपर focus करना है. Once you do that, everything else is manageable. So when you look at the current ratio, when we look at the assets, I see working capital of 80 as well as 100. So if I look at, for example, 2015, my working capital, that is current assets minus current liabilities, is equal to 80. Now can I say that means if my current assets divide by current liabilities is 1.5, for example, that means can I say current assets is 1.5 times my current liability, which means if I can substitute that is current liability is x, then 1.5x minus x is equal to 80, and thereby I can find my current liabilities. So this is, let's say, 80 divided by 0.5x, and hence this becomes 160, that is my current liability, into 1.5. 240 will become my current assets. But within my current liabilities, I will have interest payable and tax payable as well as 10 rupees, which means maybe 160 में से 10 निकाल दो तो creditors maybe 150 rupees. Same working up earlier year 2014 के लिए भी करोगे. अच्छा, next I want to find debtors. Now how will I find debtors? I have been told that my quick assets upon current liabilities is 1.1. So I can say if current liabilities into 1.1 will give you quick assets, so 160 into 1.1 will give you what? 176. That is your quick assets. Now the difference between quick assets and current assets is exactly stock. So you can say 64 will be your stock. 64 will be your stock. And if I find my total current assets now, which are 240 में से 64 stock है. Other current assets जो आपके दिए हुए हैं, they are there over here. This is all 15, and hence if I subtract this, 240 minus 64 minus 15, 240 minus 64 minus 15, probably 161 will be my debtors. If I can crack this, then I'm kind of done with this question by and large. So when I look at this question over here, I have my 2015 data. वैसे 2014 you can try. 1.5 into current liabilities will be current assets. So all said and done, your current liabilities become 160, your current assets become 240. Now over here current liabilities में से मैंने trade payable निकाला 150. Then I went to quick assets, which is 176, and 176 and 240 का difference is stock. And then the debtor working will be 161. ये same चीज अगर अपन ने earlier year के लिए कर दिया, you then find the current liability, the trade payables, inventories and trade receivables. The moment you do that, then it is a simple direct method application where you can do opening debtors plus sales minus closing debtors, and you have cash collection. In terms of COGS, you can say opening stock plus purchases less closing stock will be COGS. You can find the purchases and use that purchases to find the cash paid. 242 plus the purchases minus closing, and other than that, pura question is similar to a regular direct method question, where dividend payable, dividend receivable, all of those adjustments you do along with the corresponding items, and you get done. Again, this question institute is unlikely to ask because now earlier thoda alag tha, now your FM is in a different group, accounts is in a different group. Pehle advanced accounting and FM were in the same group, and hence institute could have asked you this fairly easily. However, now I don't think a question like this can necessarily come because now FM is in a different group, accounting is in a different group, and hence all of that may be a little more tricky, but if it does come, you should be aware. Okay, so this kind of takes care of question number 17, and by and large, your understanding of cash flow, even over here, if you go to see establishment charges paid, selling and distribution paid are coming over here. Forex gain we will take because you're assuming it is linked to operations and they are realized, like collection from debtors and income tax paid. Usually an extraordinary item, you show it separately. A regular working like every other problem, and that kind of takes care of question number 17 and the questions for your cash flow as well. So I hope you've had a broad understanding of cash flow, but trust me, this is one chapter where you will have to do pen and paper. Just understanding and listening to concepts will not take you. Do a proper indirect method problem, do a proper direct method problem, and then you go to these complex problems where you have complex adjustments, but the basic steps you need to be clear for them, and this should get done with you fairly smoothly. So that should be it. We will stop and we will continue with another chapter. Till then, study well, goodbye, good luck, and take care. Again, the format over here, if you want to be clear, you have to prepare the format: 1 page for cash flow from operations, half page for investing and financing, then write down the net changes, opening and closing, then you put in the net profit if it is indirect method, and then take one items one after the other and reconcile every items. Perfect. So we'll stop and then we will continue in the next session. Bye bye. Take care.